All right, we're going to get started. So first, we have our guests, Mike Flanagan with Movement Mortgage, and Jack, what's your last name, Jack? Schofield. Jack Schofield, who's going to be working with us with our conversion system. So all the leads that are coming in conversion and working with Movement Mortgage in the Worcester office. So thanks for coming, Mike. Can you just give us a recap? I know a lot of you are starting to take my suggestions and putting out on Facebook, hey, if we have 100%. Our lender has 100% financing options where they'll gives you the down payment money. Call for more details, and you guys are getting a lot of responses to that. So I wanted Mike to run over what just some of the basics that you should know about the program before we get into the condo side of the power hour, just so you know how to respond. Like I'm sure a lot of people are saying, well, can I invest in properties? Do I have to be a first-time home buyer? What's the income limits? How does it work? So can you go over all that?
All right, so the Movement Assistance Program is what you guys are getting a strong response to, as you should, in this market especially. It is a first-time home buyer down payment assistance grant. Grant is an important word because it is a gift. It's non-repayable. No silent second, no payment, no lien. It's truly treated like a gift, as if their uncle or father or brother gave them the funds. Single family, condo only, no multifamily yet. We're in the process of trying to add that product. The rental income makes it tricky from the other units, so compliance is working on that. Income restricted. It is a 3% or a 2% grant. So the base of the product is a Fannie Mae Home Ready loan. So it's conventional. When you structure your offers, you only need to disclose that it's a 97% conventional loan. You don't need to make mention of down payment assistance because honestly, you wouldn't make mention of the fact that the funds were being gifted from their father. It's the same thing. It's not like the city of Lowell or something where you have to file. There may be funds available, there may not be. So you don't need to disclose it on the offer. It's not FHA. It is conventional, and it's treated like a conventional Home Ready loan. With Home Ready comes income limits. In Worcester County, we're seeing 100% of the area median income to be about $86,000. If you're interested in the program, email me. I will send you the Home Ready link. All you have to do is plug in the address of the home that your buyer is interested in, and it will tell you what the 100% of the area median income is. There will be some areas where it will say no limit. That doesn't apply to this product. You always have to look at what the AMI is. The no limit is a cap for Home Ready, and it does not apply to down payment assistance. But take the AMI, if they're at 100% or under of the area median income, we can gift them 2% of the necessary 3% down. If they're at 80% of the AMI and lower, we can gift them the full 3%. We're seeing, and that's about $60,000-ish a year. It's not household income, it's applicant income. So if you have a married couple, we only need to put one person on the application. So what I say is have your clients fill out the application completely. We'll put them both on, and we can kind of move it around as you get all the data, and then we'll structure it how it makes sense and get them what they can qualify for. If you go over to Middlesex County, income limits are way different. Marlboro is $109,000, Lowell's $114,000. So get me your email. I'll send you the Home Ready tool. Always plug in the address, and it will tell you exactly what you need.
If you send that to me before, so it's just a link to the Home Ready.
Yep. If you Google Home Ready income lookup, it's the first thing on there. Click on it. Just punch in the address. Make sure you're using Home Ready, not Home Possible, the Fannie Mae version, because we go off of Fannie, not Freddie, for this product. Important note: if you have clients that are interested in it, get them in sooner than later. Fannie Mae only has this approved through January, middle to late January, and they haven't renewed it yet. So they probably will. Freddie didn't renew theirs. Movement's been expanding what we've been doing on it. We've added LPMI versus regular mortgage insurance. I don't think we'd be doing that if it's something that they're going to not renew. But just know that we have to have people in and locked prior to January as of right now. as soon as it gets renewed, I'll hit you up. But that's kind of a great push for the winter months where people aren't, super motivated. If you're trying to, try to get some fire lit under them. Hey, this program's only guaranteed to be around for another 70 days.
As long as they get to agreement.
Get them an agreement. I'll get them locked. Get them an agreement. Make sure their inspection's done so they know they're moving forward.
Right.
And then we'll get them locked in it, and then they're good to go. Yep.
What's the credit score?
Credit score minimum. So here's the number one thing I've seen with your Facebook ads that have been coming out. I don't generally make mention of, don't need perfect credit to qualify, or, it only requires average credit. The minimum credit score is a 640. But the minute you put on Facebook, don't need perfect credit to qualify, we get all of the bankruptcies this past year. We get all of the short sales this past year.
Come on, I got a credit score of 280.
It's like the men and women hear and see different things. We say, you don't need perfect credit. The people on Facebook go, oh, I have awful credit. I'm going to apply. That's what they see. So I don't usually pre-screen on credit, but I just say, hey, you can put in what the minimum credit score. In Massachusetts, 640. The only state that has a higher one is like Washington. I don't think you're doing Washington State. So put in there, like, have a 640 or better or close to it. I think Lou sent me one. They're at a 628. I popped on to our Credit Plus. I just need him to remove an authorized user account from his girlfriend, I guess. And he goes up to like a 645. Boom, he's in, So I would say if you want to pre-screen or you want to attract those people that might be fringe, give them the credit score. Like 640, if you're near 640, call us. We might have the option for you. But if the minute you say like you don't need good credit, we're getting the 480s and the 520s, and I probably got 30 calls from people in that range. So, it's just we don't ever want to pre-screen, but we don't want to attract that kind of collection of business. So I would always put the minimum credit score in there.
How many days to post, please?
I mean, it's no different than a conventional loan. So if we need to do one in a couple weeks, we can. I would say, normally if we had to do one on the fly, we could do it 10 to 15 days. Give me an extra week because I have to do a home buyer education course. And that's the thing that kind of gets me. Sometimes they do it in one sitting. Sometimes they don't do it for days. You know what I mean?
How many hours?
It's framework. I think most people take about 3 hours to get it done. There's 8 modules. If anybody's ever had a buyer that had to do framework for Home Ready, it's pretty easy.
Is this online?
Yep, it's online. We'll give them the link. If it's $75 to do it, and here's one of those things where you get clients that just don't have a ton of money. I do have coupon codes that I can use for it, so let me know if that's a hang up.
I don't want to work with anybody if they get
So,
$75.
You'd be surprised, man. When you're a buyer and you're trying to get first-time home buyer assistance, you get a home inspection, you get an appraisal, and you get a $75 home. Like, that's just money that adds up to them, and sometimes that can just make it a little different. So let me know. I've literally done 3 or 4, but that's been the difference. So that's why I bring it up.
What's are the interest rates any higher? Or
Yeah, so interest rates are going to be about a 1/4 to 3/8 margin higher. Oddly enough, the mortgage insurance is subsidized on this product. It's a radian split edge product. We can get into the details on that later. But if they're qualifying around 4.25 to 4.375, which is around where someone with a 3% down payment would be, we're seeing them about 4 5/8 to 4 3/4. However, their monthly payment is actually lower because the mortgage insurance is subsidized by about 50%. So, we just kind of sit down and talk to them. Hey, we're giving you $6,000 towards this product. Your interest rate is going to be slightly higher. But overall, your monthly payment is going to be about the same. And at the end of the day, if you want to come up with the down payment, we'll be happy to give you market rate. So, yeah.
Okay. Any other questions on that program? How to use it? I mean, the other thing is if So as far as if that program doesn't work for them, then obviously USDA is probably an option too.
Yeah, I mean, we more or less use the USDA attraction and then move it to this when they can't find a property. Like that's a good way to sell it, is get people that are looking at USDA but just don't want to be in a USDA area, and then say, hey, well, you know, you're attracted to this. We have almost the same exact thing on a conventional line. Like, let's look at that option, and then that opens up the entire state. You know, it works everywhere. Though the one thing you're going to run into issues with is the offer. You're going to offer a 3% down, and you're probably going to be asking for a seller credit to pay for closing costs. And they're going to say, well, I'm taking a home off the market for a $500 deposit. You know what I mean? I almost always get a call from the listing agent when these offers are submitted. So we get the borrowers in, we get them through underwriting, and we're getting loan commitments from them before these offers are going out, because we can do that in a day, 2 days. It's making all the difference in the world when I get a call on Sunday afternoon from a listing agent saying, hey, what's going on with this program? Listen, it's a conventional loan. Yeah, the deposit's pretty low because they're getting some seller credit and we're giving them the down payment. They've already been under it. I just need to appraise your house. And let's go. So that's going a long way with it, and that's going to be your number one pushback from sellers. Just think about if you guys had a listing and someone sends you an offer with a $500 deposit, $500 at P&S, and you're like, $1,000 and I'm taking this thing off the market for a month, you know, you're going to be skeptical. But at the end of the day, if I know that the borrower's financials are good and you're confident that the offer price on the house is going to appraise out and we're good to go there, there's no reason not to take it.
Am I correct me if I'm wrong? I think with this program, your income to debt ratio is better than USDA.
Oh, absolutely. Great point. Yes.
Is gonna be much more.
So the USDA caps, with or without the expanded eligibility where you're doing the compensating factors, we can go all the way to 50% DTI on this product. Because it's got subsidized mortgage insurance, the monthly payments are almost the same. USDA is going to be slightly better because it's a Ginnie Mae rate versus a subsidized FH or subsidized conventional that we're pumping down payment assistance through. But maybe that quarter spread to conventional is a half, and that's on a half on most of these homes. That's $60 a month difference. It's not, you're not going to blow the DTI up from 43 to 50 over $60 a month. So oftentimes we're qualifying more on MAP than we are on USDA.
The lack of reserves.
Yep.
I found that too. The closer you are to 640 with USDA, then they want 3 months of reserves, and you're like, you know, if you don't have a 401k or anything like a retirement plan, you don't have 3 months of mortgage in the bank.
Reserves is a huge thing because on the home ready, they're not expecting someone to be needing down payment assistance, and Fannie Mae's actually opened up the seller credit from 3% to 4% on this, so I can get an approved and eligible due to too much of an interested party contribution on this, and I'm okay with it. So they're not expanding the amount of money that can be pumped into the deal, expecting them to have reserves. So it's still AUS approval. I got to run it in and get it there, but it's never going to be one of those things where they want 2 months reserves because the program's not even designed for them to have it. So yes, again, great differential between the two.
Any other questions? Good stuff.
Yeah.
I would even recommend you maybe put some information in your listing sheets, in your listing descriptions about it. Ask me about 100% financing options on this property. If you put that in a list or listing, it's going to get you
Right.
probably some calls. So I would recommend you put it right in your description, because otherwise, other than this program, you're really not going to find. Other than VA, you're not going to find a 100% financing in Worcester.
Right. And I've honestly done VAs through MAP too, because they don't, 100% financing on a subsequent use is like a 3.1% funding fee. So they're saving 3% of an upfront MIP essentially is what the funding fee is going to be for you. So anybody familiar with Mass Housing Operation Welcome Home? It's a VA alternative. This is almost the same product, except we've opened it to non-veterans. So that's another thing. If you have veterans that don't have a VA benefit, Mass Housing does have 100% financing veteran loan too. So FYI. Yeah.
All right, any other questions on that? We'll move on to the condos. All right, let's get going with the condo portion of this webinar. All right, where do you want me to?
That's the end of it. Really nice. Really nice. I'll just one of the morning.
You can work it if you want.
Yeah. All right, so I'll just kind of start here. So what these presentations are all for, you know, whether it's movement assistance program or this condo pre-submit thing that I'm going to go through, it's all tools in your toolbox to go out there and sell. That's what movement's about. We're here to work with the agents. We're here to help you guys get listings, sell homes. You know, this company was built by a real estate agent, and he knows the hooks that you guys need to get in there, and this is where they pump the money in. So condo, we're going to go through today. What this is not a presentation to teach you what is approvable as far as condos go. What this is, I'm not a condo guru, to be 100% honest with you. I don't know the ins and outs of condos. I know enough because we've done them quite often, but this is movement mortgage and how we handle condos, and this is a huge, huge value prop to you guys. So what we will do is we will approve a condo project before you have a buyer, okay? So if you're a listing agent and you get a listing that's a condo, you don't have to play the game, go look at the past sales, see if they were purchased cash or finance, wonder who did it, you see Alliant Federal Credit Union on there and you're like, oh crap, that's a non-warrantable, you know what I mean? What am I gonna do here? Do I have to find non-warrantable options for it? We'll go in and we'll get it approved ahead of time for you. We don't pass the cost on to you. We don't pass it onto the seller. We will pay for it, absorb the cost. We will do Fannie, we'll do Freddie, we will do FHA and VA if the HOA is interested in doing it. And the reason I say that is quite often HOA management companies aren't interested in getting FHA and VA approved, and there's no sense in wasting the time or money to do it because they just throw roadblocks in front of you. Use it before you have a buyer. Approved conventional FHA VA, no expenses passed to owner, as I said. Here's what we need. We need the name of the HOA company. We need a name of the management company. We need a contact for the management company. We do need a unit address for listing, so we generally want to see listings on this. If you don't have an active listing, contact me and we can make it work. But generally speaking, we want to see a situation where there's a listing coming live. And the reason being, the HOA management companies generally want a seller to sign off on them releasing the documents to us, even if we're paying for it for whatever reason. It saves us a lot of time in chasing around people and getting documents, getting half of them, and then they want an authorization signed by a seller. So if we have an interested party to do it, we don't necessarily need the listing, but we do need a unit number. We're going to need someone most likely to sign off on sending us the stuff. It's super quick. We're going to get all this stuff in. And the reason we do this, we have 0 overlays. We approve condos direct to Fannie, Freddie, FHA, and VA and condo guidelines. Who's heard of no, can't do it, no pending litigation? Anybody ever heard that when they get a condo? It's not a real thing. That's just an overlay that I work at guaranteed rate. Pending litigation, throw it away. Can't do anything with it. That's not real. That's just because people don't want to apply for the waivers and they don't want to take the time to look at what the litigation is about. You can file for waivers for one-off issues. So if you know condos that have had issues getting financed in the past, reach out to the management company or reach out to the listing agent that had the expired, or if you know someone that's had trouble with it, figure out what the issue was. We'll always file for PEWs if we need them. Rescue deals. If you have a denial from another lender, turn around and ask for the questionnaire, the budget, and the insurance. We'll send it right to our condo underwriters. They'll go ahead and get us an answer on it right away.
The condo that I'm dealing with at the moment, they have a website where you go and you actually get all that stuff, the questionnaire, the insurance, and all that, for a fee of, I don't know, whatever it's $100 or whatever.
Yeah. So generally on those, if you have the listing, send us the website. Our company will go in and we'll purchase them. We'll get what we need. We'll go through and get it approved. So back to the rescue deals. If we get the questionnaire, the budget, and the insurance, we'll send it in. Our condo underwriters will take a look at it right away. Ian Westcott heads up the entire condo department. I got his number on speed dial. I just had one that came from Drew Mortgage Associates that they couldn't do, pending litigation. Wouldn't do it. We also couldn't do it mainly because the complaint hasn't been filed yet, and we have to wait until the complaint's filed before we can get an eligibility waiver. But we know all of the hiccups with the project. We know that the project's the plaintiff in this situation. So as long as we get that the complaint filed, we're going to be able to go ahead and do it. Drew wasn't even interested in it because they have an overlay. If it's got pending lit, not interested. Dedicated condo underwriter, condo processor assigned to you. Again, we'll be able to communicate with them directly, figure out any issues. This is a big thing. We have a staff attorney. This is why we're allowed to do things with pending litigation. We have someone on file that handles all of this and handles it directly with Fannie and Freddie. Condo concierge is a liaison between myself, ops. I can send scenarios, questions, ETAs, if you want to know how long it's going to take to get something done. The biggest time suck in these is getting the documents. It can take 5 to 12 days from the HOA company. So if you're actively involved and you kind of pester them, they're going to fill out. It's 3 pages. Like I could have my niece, my 12-year-old niece, fill these things out. It's copying the more you kind of pester them, the quicker they get it to us. We use Condo Project Manager. Reason being, it's good for 6 months. So if you have another sale in there, and this will kind of get to the sell for you guys afterwards. If you get one approved, you're good for 6 months. You can basically market that, tell everybody you got it approved for financing. Any active buyers that come in, we're going to already have it in our system. They're not going to need to pay for new questionnaires. It's a huge value prop to you to help own that project. Approval certification is exclusive to Movement Mortgage, meaning anybody can go in and improve the project, but they're going to have to do it on their own. The CPM project is not, somebody can't say, hey, it's approved in CPM and Fairway, go do this loan. They're going to have to start over and do their own project with it. So it protects our interest and our investment, but it also helps you guys because it's going to help funnel the business towards us and funnel the business in. We've got one project here in Worcester I get 4 or 5 calls a week on, just because the listing agents that handle one deal went in and did all this, and now they own that project. Anybody that calls uses them. Other lenders are likely to have overlays, so just because we have it certified doesn't necessarily mean that someone else can. And Freddie Mac accepts CPM as well. So the big advantage to this is limited review approval. We can do an approval that's good for 6 months. The difference between CPM full and limited is no budget's needed. If you have ever had a project that has issues with the budget, we don't need it on these. No fidelity or general liability coverage is needed. We had one project in Worcester that changed their insurance agencies, and they got rid of fidelity coverage, and so therefore it wouldn't qualify at 90% of lenders out there. But on limited review, we can go ahead and do it. Delinquencies are not reviewed, so if you have 8% of the project that has past due HOA bills, not a problem. The only trade-off on this is it requires a 10% down payment for first-time home buyers. So how does a borrower qualify for limited review? Must be primary or second home, can't be investment. 10% down versus 5%. Second home borrowers must put 25. I can't do it if it's an investment. Turn times on these, in-house approval process as soon as we have it needed. So generally pretty quick. Once we have the documents, 24 hours, underwriting will go through it. FHA approval is the big one. We don't mind doing it, and you can really gain a ton of business if you get an FHA approval. It'll attract a ton of first-time home buyers, but it does take 4 to 6 weeks from the time we get the documents. Don't accept an FHA offer on a condo that's not FHA approved unless the seller is willing to wait that long. We generally can sniff out the issues with FHA before the 4 to 6 weeks. Like, we're not submitting them for the 4 to 6 week turn time unless we're fairly confident to very, very confident that it's going to pass. So generally speaking, we'll know. It's just a matter of can they wait 6 weeks for it to come back. Same for VA. It's pretty much the same exact process. Highly recommend, not submitting FHA or VA because we can't guarantee approval. This is actually a thing for us. trying to build a relationship with the condo community, great hook for listing presentation. If you're trying to get a listing in a condo and they've got 3 people that they're kind of shopping with, if you tell them that you're going to get their project approved for financing before they even have a buyer, so that entire risk layer has been eliminated, and they don't have to pay anything for it, that's going to give you a leg up on the listing day in, day out. What we really suggest you do is if you go back to any past clients you've done or in condos, purchases or whatever, see if they don't mind letting you request the budget, request the condo docs, get it in there, and then we'll market the crap out of that community. Thinking of selling, we already have it approved for financing. Talk to me. That's going to get calls. That's going to get great listing business for you. This is kind of more on live deals, but within 8 hours, your submission is going to be assigned to a pre-approval processor to be notified via email. Within 8 hours, being assigned, your processor will reach out to us on the HOA property manager. This is kind of our 671, if you will, of condo project. We always have our service level agreements that we're going to meet. We can get more of this stuff to you if you're interested.
Connecticut also, or is it Mass?
Any state you want. Or say any state that we're licensed in. Once the order is placed, you'll be notified via email. It kind of goes from there. Yeah, normal turn times to get docs back, like I said, 5 to 12 business days. As long as you're the squeaky wheel, it can usually be 2 or 3. Kind of get to the, if not approvable, we can again file for the PEWs. When we do file for the PEWs, we only want to do them on live deals because they're only good for the closings that they're on. It's just a matter of, Ian will call Fannie or Freddie. Actually, Freddie doesn't do PEWs, but he'll call Fannie and say, hey, this is my situation. Can I apply for a property eligibility waiver? They'll generally say yes or no, like this would qualify or this wouldn't qualify, and then we'll go ahead and do it once we have the buyer in place. But we'll have to do that on each and every buyer, so it's kind of a different process, but it's still good to know that it can be done. Denied, again, if it's something we can't do, we'll let you know why. And we have broker relationships for non-warrantables. FHA and VA packages, requested to receive for pre-approval or FHA or VA, determine their possible eligibility based on docs. Went over this. We don't always order all the docs up front. The cost and turn times are both factors here. This is, again, just kind of a disclaimer. If the HOA is not interested, we're not going to spend the money, and we can sniff that out pretty quickly. Just some of them don't want to deal with it. Yeah, here we go. They don't want to be FHA or VA approved. They'll not cooperate. Oh, if you do have a current owner that really wants to push it and they get involved on FHA and VA, you can shift that mindset of the HOA management company. But again, I don't know, talk to me about it. I really hate doing it when the HOA is not interested. Most companies charge for this. Most companies charge a lot of money to do FHA and VA submissions, usually in the $1,000 to $1,500 range. They'll charge the HOAs and pass them on. We don't. We'll get it done for free. Can I get those links that you pulled up? So what happens when you get one approved and you have it? We'll show you. Let's go to that one first.
Oh, it's fire.
Yep. So first, once we have it approved for now financing, this was a Berkshire Hathaway agent. I did one for Natick, Fairway Estates in Natick, Mass. This is just one of our 4 or 5 different marketing flyers that we'll put out. We'll start marketing the plaza. We'll start marketing the complex. We'll start marketing your website, saying, hey, this is approved. Start emailing the current owner or mailing the current owners. Start reaching out. You're going to get listings if they know that the financing is taken care of. If it's a 55 and over where every purchase is cash, don't waste your time. But you'll know the difference between different projects. Start with ones that have been FHA approved in the past that have maybe expired. We can layer these condo project approvals for Fannie Mae with our movement assistance program. So if you have a condo project that's approved Fannie that can qualify for down payment assistance, you're opening up a massive buyer pool of people that might rent an apartment, but hey, if I can buy a condo, why not? Do you have the email I sent you? There's a couple links in there.
Oh,
Yep, that's fine. Just click on that first. We have marketing that built around it. This is Kellbrook Lofts in Worcester. I don't know if you bumped into them. Keller Williams across the street from me basically did the legwork to own this project.
Yeah, and I had a listing in there at one point. It was before I knew about this program, and it was very hard to get a buyer in that program. I think the equity in all those units went up at least 20,000,
Exactly.
30,000 as soon as
we opened it up for financing, Kettlebrook Lofts blew up. We get calls on this every single day, just about. This is the condo landing page that's been linked to Kettlebrook Lofts website. So when, if you get a project approved, speak to the HOA manager or management company. Wix websites, these cheap little 5-picture things, here's what it is about the condo. Like most condos don't have that. Most HOA management companies don't mind if you go ahead and throw one up. You get a couple pictures of the plaza, you get a couple pictures of the common areas, you know what I mean? You just put a brief intro about the place, link to this condo page. You can basically be the de facto owner of that project. That's what KW did on Kettlebrook Lofts. This is great lead capture. Up on the right, it has my information, but just next to me, we can put yours. If you are a member through our Total Expert, so they can contact you. It's kind of a great landing page lead capture to funnel people into. Click on that. Yeah, it's basically, that's just they both do the same thing, but
okay.
one funnels you a different way. So
Cool.
Go to the other link. There we go.
Okay.
We have a Google Map interface with our project approvals too. So if you have a potential listing or a potential buyer looking at a project, we can get you hooked up on Google Maps. We track everything. You punch in the address and it will tell you if we already have it approved, what we have it approved for, what the, can I see the interest? So it's good, you can check off what you're looking for. Freddie, I don't really suggest you mess with this, but this will tell you which ones are Freddie, which ones are limited only, meaning the 10% down. Owner occupied second is basically the same as that. All occupancy, FHA and VA. These are all the condos around the country that we already have taken care of.
That movement does?
Yep, movement does. These are all active approvals. Worcester is pretty vacant. You guys can go around and really do some damage here. I think 21 Beeching Street condo, entire project. Condex. You have those little dinky 2-family condo things, and you have a listing on it, on one side of it. Let's take the condo, quote unquote, stuff out of it. We'll get those approved just as we would a big project. Those are so much easier. You don't have to deal with an HOA management company. We're just going to make sure the master policy is good. If the master policy is not good, that's kind of a nice thing that your seller can politely talk to their other side about and say, hey, we need to get this figured out right now. But take that whole, I think that's what 21 Beeching is. I think that's a Condex. But get that all out of the way, get it done beforehand. So you're not having someone come in and saying, hey, is this, a lot of banks don't do Condex. They're just not interested in it, just because they don't want to deal with the master policy stuff. So get those out of the way. Crossview condominiums, not familiar with. Point Rock Estates. This is one I just did a couple weeks ago in Marlboro. St. Mary's condominiums in Marlboro. This is a great one. It's in that like 300, 350 range. I think there's maybe 46 units. It's an old converted church and rectory they made into condos. Also approved Fannie Mae, also has our down payment assistance program. Berkshire Hathaway agent had a listing in here that was on the market forever. And we did this, marketed it with down payment assistance. I don't know if she sold that unit, but I do know she's got 4 closings using MAP grants around town. So it's great lead generation. Marlboro Court, there's another one in Marlboro. You'll notice if you go down in towards Rhode Island, there's probably a lot more because Movement has a larger presence in Rhode Island. Yeah, see they start to pick up here down in the Providence area. But Worcester's wide open. In between here and Boston, there's plenty of single-family condo units that are looking for approvals. So,
How would they find out if a project's not currently approved? Is there a way to do it before you talk to homeowners associations?
generally speaking, if I want to see if a condo project has an issue, I look at past sales. In Massachusetts, mortgages are publicly recorded just like deeds are. So you can see if it's been financed and you can see who did the financing. If you go into a project and 4 months ago there was a finance deal from Fairway, pretty safe bet it's approvable for financing. If you go in and it's all cash and there's a sale every year and it's cash, chances are there's a financing issue on it. So there's no 100 outside of FHA, because FHA you can just go to the FHA website and look up the project. But for Fannie, Freddie,
Would that be a good starting point if you found out if it's not FHA approved?
yeah, keep your ears open. You guys are going to hear far before we ever will if someone's having an issue with the listing on condo. If I'm slow on business and I'm just looking to make some sales calls, I'll go into some listing engine, whether it's Coldwell Banker, Zip Realty or something. I'll find all the condos in the area and I'll sort it by been on the market longest. And I'll just call them and I'll say, hey, what's happening here? Why has this been on the market for 90 days? You know, are you having financing issues with it? Let's help you out. That's how I got St. Mary's. And sure enough, it just needed one small tweak and we were good to go.
Where would they find the FHA, what is their FHA?
I can send you a link, but if you just go FHA condo approval on Google, it should bring up their website. It's on the HUD website. It will list every single actively, there's 2 tabs that you're going to hit. You just hit active and it will show you everything that's currently approved. Hit expired and we'll show you everything that's expired in the past 5 years. That's a good one. A lot of FHA stuff is expired now because FHA doesn't allow leasing restrictions. They used to. So there's a lot of good stuff in there. If you find one that's FHA, you know, expired and it has a leasing restriction, those are great conventional ones because owner occupancy saturations aren't usually an issue. If they can't lease them out, you're not having a lot of investors in there. So those are great projects to go in and get. Assabet Village in Hudson is one I've been trying to get an agent to go get approved. If anybody wants to go into the fringe Middlesex area, you're going to get a ton of first-time home buyers in there. If you can layer that with down payment assistance. We had one that we started working on and then the seller flaked out. So we got one sitting there. That's a great project. Like I said, anything. There's some in Grafton that are pretty good. We're doing Cherry Hill. I forget what the name of that project is right now. And a lot of these agents got approved and then abandoned. You know, this Fairway Estates Natick, this girl that's on this flyer, I don't know where that went. But she quit Berkshire Hathaway. So this is just sitting there now. If anybody wants to go mess around in Fairway Estates and Natick, let me know. I'll set you up with the financing flyers and you can go out and market it. This is all approved. It's good for 6 months. You know, see if you can get some listings in there.
Looking for agents also. Who's she working with now?
What's that?
Who's she working with now?
She does leasing now through some rental management company. Give her a call. She was smart, but couldn't make the money, I guess. It's hard, you know.
What's the one down there between Sturbridge and Webster? Only because it's
Which one?
right there. And it says on South.
This one?
Oh, that's who I was gonna. That's who I was gonna go. I own a condo in there and I have a listing in there.
Oh, do you?
Yeah.
So market it. I don't know who's got this approved. It was probably one that Greg Gentili's group did. All this stuff is up for grabs, man. Those guys don't work here anymore.
Right.
Go hit them up. Let me know. Sign up for. Let me know if you want a link. I'll send you the Total Expert and get your logo, get your picture in, and I'll send you it's approved for financing.
Right.
Just pay for the.
Yeah, because I'm in the middle of a deal now, and like I said, I actually own one. So.
Yeah. Yep.
There's so many kind of projects out there.
Tony.
Well, that only has 50 units. What's that?
Tony the condo.
Condos
I
are
don't know,
tricky
personally,
space.
I like prospecting in a place where I can get multiple listings.
Yeah, absolutely. Like getting a subdivision, you know.
Right.
I mean, the one-off condos are never much fun, but if you get to know a project exclusively and selling
Yeah.
And I would say, you know,
half a
work
dozen a year, it's worth it.
exactly. I would say work smarter too. Like, don't go out and get the $64,000 unit place approved and deal with all the headaches that that's going to come with. You know, do some prospecting. 150
So
to
about 120 there.
250, you know, yeah, 100 to that. I mean, it's a great clock them over.
Yeah.
You know.
And then you can hold on your 6% too, because you've done all the legwork. Like,
Right.
Not to show you your competition, but this is what I think is genius on. KVLoft.com. They spent what, $5 on GoDaddy to get that. This is just a Wix website. Got one picture. They put availabilities on here. Anybody in there knows about, you know, knows about these guys. They get everything.
That's Justin Jaguar.
Yeah.
yeah.
Yep.
I was wondering why you had so many over there.
Yep.
You come and turn around and set a unit in there.
The funny thing is, one of our agents had that opportunity and was not following up enough to try to push it through condo approval, and then kind of dropped the ball on it, and then Justin picked up the ball and ran with it, and now he gets all the sales in there.
The
You can't stop short.
right. The and Kettlebrook also, it was a full approval not too long ago, and they recently changed management companies that got rid of the fidelity, so we've had to go limited, and it has not impacted their sales at all. In fact, if anything, it's gotten a more qualified buyer profile in there. If we ever had to, we could contact the HOA management and get the insurances back in place that they needed, but you know, don't think that. Again, that's a situation at another lender that would have just all of a sudden the financing would have shut off, you know, and because we're able to pre-screen these things and know what's going on, we can work with them. And because we have no overlays, you know, I'm not going to tell you that there's not a non-warrantable out there. There's tons of them. But we'll at least be able to know for any given certainty that institutional investors is not an option because we'll have looked at the entire thing. So, and again, if it is non-warrantable, we got options for that too.
All right. Any other questions or thoughts, or how do you go about this?
I would just say it's like everything else, especially in Worcester market. Get the stuff to us. Let us pre-approve it. Let's get all of the question marks out of the way. The sooner we get our hands on something, the smoother your transaction is going to go. You know, it's. I have one of your agents sent me. This is actually a buyer, but she's very tight on debt to income. Buying a second home, she lists her on her application. She doesn't have any rental obligations. She basically lives with family, and what the situation is her husband owns the house that they live in Florida, and she's not on the mortgage or anything, so she didn't disclose on the app that she has any liability to it, as 99.9% of people would assume. But she is on the title, and he doesn't escrow the taxes and insurance and the mortgage. So she is technically obligated to pay half the taxes and half the insurance on the property. Blows her debt to income. We found that out in the offer stage. It can be fixed. It's not the end of the world. I can get her off the insurance. We could quick claim her off the title to the house for a little while. We can refinance it. There's a billion things we can do about it, but not if it's a week before closing, which is when most people are going to pull data verify. So, you know, it's get it in, especially in this market, you know, sniff out all the problems. That's what we're built to do. And that's why we do things the way we do. And I think that if the more that you leverage that and the more you do it, the stronger the bond between you and your clients are. If I get someone in for a pre-approval, we find an issue with their financing and we get it fixed, and it saves them from having a headache down the road. I know they're not shopping lenders. I know they're not shopping real estate agents. So it just solidifies those relationships, and it really, really helps your deals. That way, when you get an offer accepted, you know, you're dealing with inspections. We'll deal with the appraisal, let you know if there's any issues with that. But other than that, go out and find the next deal. Plain and simple.
All right, so what would you say are the steps of trying to prospect something like this?
Well, one, I can send you the link to the site if there's an approved project that you want to go after.
For that one slide you put up there that gave us everything we need to do.
Yeah, I can email you just basically the steps. Yeah.
So you have to identify a project.
Yep.
You have to find out. I would probably check FHA to see if it's not approved. If it's approved for FHA, it's probably not worth going after.
I would almost say
shit together.
Well, I would almost say I wouldn't limit it to the ones that have issues.
Okay.
I would get it approved, get it through our CPM so that you can own it. The more that you can go out and you say, oh, I already have that approved for financing. You don't even have to drop my name or my company's name. I already have a lender that has that approved for financing. I don't need to underwrite it. It's good to go. You know, the more you can represent yourself like that, the more you're going to attract the listings in that project. You know, I don't know how you guys advertise. You do a lot of Facebook, you do a lot of e-advertising, but on those, if you're dropping a flyer off, I already have it approved for financing, and you're dropping a flyer off the units once a month, you don't even need to use the post office for that. You can have someone paper it for like 10 cents a door.
Probably the first step is to find out who the homeowners association is.
Yeah, I would say identify the project and then find out who the management company is.
Which would be isn't always easy because I guess
Expired, condo
the bank
expired.
owns, well, you could call it expired and ask
What the issue was, you know.
or who the homeowners association. I just know I've worked with bank owners. It's not always easy to find out who the homeowners association is. Sometimes you'll drive by and you'll see managed by, but not always. Sometimes you can Google it.
Yeah.
If you know the name of the project, you can Google a homeowners association.
I just go to somebody's door and be like,
And the name of the
interested
project.
in one of these condos, who do you guys use for homeowners association?
Yeah.
Right. There
Or,
are
I mean,
some
property management, I mean.
companies that do manage a lot of projects.
Oh, yeah, that one in Southbridge, I guess the guy does quite a few, so.
Yeah.
I mean,
So you got to find out who that is, and that's probably the first step, right?
yeah, or you could build a relationship at a management company and figure out who they manage. They could give you 5 places that they manage and then go that way out, you know. Or ask a management company which places they've had problems with. They're going to know who they've sent out condo
Well, I'm
questionnaires
gonna wanna
for.
follow up with whoever it is for this fifth in the thing here in Southbridge.
Yeah.
Yeah.
Like I said, I know he does more than just that one, so.
Yeah.
And, I'll talk to, I know his name is Steve, and.
Yep.
Go from there, I guess.
Yeah. I mean, again, this is just another tool to you. If you don't feel like getting into condos, bypass it.
I
But
don't give a shit. Condos, houses, or sell dog houses,
Exactly.
somebody will buy it with.
What was it, 7%?
yeah.
Right.
And use us. Call me if you want to talk about it, or sit down and have coffee and find a way to leverage this. Let's talk about it. It's there for you guys to use. And
Well, I always used them when Greg and them moved. I went with them, so, I mean, I got no problem. I mean, the company was always fine, so.
yeah.
So you find a management company,
Yep.
you go and you tell them what,
I would just so I mean, it depends on what your angle is. If you're trying to get it approved so you can go in and get the listing business, you know, just is anybody, I want to get this approved, you know, ask them what their condo budget stuff is. Do they need a seller to sign off on it, or can we request it without a particular unit? Like, there's a few different things that we need to know. It all depends on how you're going in. If you're going in with a seller, like you have someone that's interested in selling and you want to get it approved, that's easy. You just contact them, you just give me the information, we'll take care of it. But if you're trying to reverse engineer and find someone ready to sell, talk to them, see if there's any that they've had issues with. You know, we got a lender that will help fix the issues or apply for waivers and see if they'll pass on your information. If they don't require a seller to sign the authorization to release the financials, then just get me that information and we'll take it from there. Speak to
I
other
wouldn't be
people.
surprised if you approach it right, you should get the support of them. Because I know that homeowners associations can't stand probably all the calls they get for requests for.
Yeah, the questionnaire and all that other stuff.
They
Like when I
still
went,
need-
they were like, just go to the website, you can order it.
That probably drives them nuts. So if you could say, I want to handle the project, I want to get the project approved, I want to become the source for selling units in the project, and we'll have all the information always ready so that, less.
Yeah, we
time on
won't have to
your
bother
hands,
you, right?
less.
You got to be a little careful with that because some of the HOAs enjoy getting the $500 a pop for a 3-page questionnaire.
Right.
They act like it's the end of the world, but it's like, it's 3 pages, dude. You know what I mean? Why is this such a big deal? Sure. I'm going to stroke you a check for $450 for you to fill out a 3-page questionnaire in 5 to 12 days. Hey, come on, man. So they do like the cash flow of it, but you can usually build a rapport with them over ones that they've had issues with. Because the ones that they have issues with, those are the thorn in their side. Those are the ones that someone sends the condo questionnaire like, oh crap, I gotta fill it out for this $400. I know it's not gonna get approved. I'm gonna be asked for all this, supporting documentation. If you can find those, then we can figure out if it's a legitimate issue with it.
Something you can fix.
Yeah, or it's something small, like, real quick, find the ones that have budget or HOA past due fees. Right off the bat, we can limited review those and don't need that. So anybody that's had those 2 issues, we can do 10% down financing, completely warrantable. So that's the easiest take, you know what I mean? Which ones aren't financeable because HOA dues are delinquent, or which ones aren't because the master policy is screwed up. Those ones we don't have an issue with, 10% down. And then you can kind of fall into the other stuff as it goes.
Where condo sellers typically go?
You mean,
That's the other thing to think about.
Oh,
A lot of
yeah.
times people buy their first home as a condo, and they're looking to move into a single family house. So sometimes I think we think, oh, if we want to sell a bunch of condos, but there's potential spin-off business there too.
Oh, absolutely, yeah. Shoot your database for sure.
yep.
Any other questions on this? Sounds good.
Just how do I get to become an
Condo king?
expert, something other, or whatever the hell you called it there?
Total expert?
There you go.
Yeah, I just need your emails. And what we do is we email out a link. You click on it, log in, use Google Chrome or
That's
Firefox.
who I use anyway, yeah.
We're having problems on Internet Explorer with it getting signed up. It's very similar to your conversion, so you should be familiar with it. In fact, if it was the same company, I wouldn't be totally surprised. They look almost identical. So like I said, contact info, headshot, logo, and then you'll have full access to our suite of marketing, including landing pages. I can set, just like I can set this up, I can set you up movement assistance program landing page. That's kind of good for pre-screening. It takes a lot of the silly questions off my desk.
Do you have that mobile business card thing too?
I don't.
You don't.
No, but I probably should. That's like the 3rd time that's come up.
Well, it's great because when you send it, it
Get the
sends
content,
you,
yeah.
and then you know where it came from, and
Yeah.
then they can fill out the questionnaire or whatever online.
When you do get the links filled out for this and you get this landing page, so if someone goes to explore your options, whether they do one of these,
same type of thing, right?
it's going to set up a lead in your Total Expert. And Total Expert has a CRM in it too. So anybody that comes through this stuff, it's going to load it all into your
Right.
system just like it is
So
mine.
you know in the future,
Exactly.
right,
And we
where
can
it
set,
came from.
and I can set it up to say it came from this landing page versus movement assistance landing page versus your open house. If you want to use one of our registrations for open house, it'll tell you it came through that. Whether it came through an email blast that you sent out through the system, it all tracks. It
Right.
all loads in, so you can look at it. Tell you the date, they'll tell you the campaign, tell you everything. So it's a pretty good system, and we can set this up for one of a billion different things we've got. I could do an entire power hour on Total Expert sometime, if you wanted, because it's pretty good stuff as far as integrated. You can follow your clients through the transaction with me. It'll tell you when they filled out the application. It'll
Yeah, I
tell
like
you
that.
when
We used to
they-
get the email
Yep.
that, you know.
This is even
and the
better.
dates would come,
Yeah, so you get that on live deals, but this is even better because it'll start tracking it before that even picks up. So you could go in, it's, I don't know, the total expert guy calls it the domino pizza tracker. Like at the top, it has these different stages. You can click on it and it will show you when I disclosed them the loan. It'll show you when they access their disclosures. So I can go, Tony, you know, I know you're at my butt about this approval, but your guys have not e-signed the disclosures.
Right.
You can totally fact check me on that and go in and see if they've accessed it or not. So it's good accountability stuff,
Right.
and it's great to help. I mean, you and I both know that managing the buyers is just as much as managing the lender or the agent and each other.
Oh, yeah.
You know, we ask
Yeah,
them
you
for
can't
stuff.
do it if they don't bring you
Right.
the documents, right?
So it's again, it's great for accountability reasons because we can
Right.
see what they've got going on.
Yeah, yeah.
And what's happening.
Here's my email address.
Perfect.
All right, good, good stuff.
Thanks, boss. Oh, I got it.
Any other questions? Where are the interest rates going? Still the same?
So we had them, I don't know, they were down basically 60 basis points end of last week. And now they're back up over 3.5s over 103 today.
Any movement, mortgage predictions for 2018?
My prediction for 2018 would be volatility. How about that? You're going to see them go up and down. You're going to see them swirl. It's watch for tapering. That's the biggest thing. You know, Fed raising interest rates is all baked into rates. So when you hear rate hikes, that's not going to have a ton of impact on what you're seeing in the day-to-day. It's all been the dot plot, for those of you who are familiar with the Feds, that's all accounted for. It's all there. They know when they're going to raise. They know when they're not. Yeah, it's a bond. So, you know, as those raise, the yields go up. But the biggest thing right now suppressing the rates is the Fed isn't tapering like they said that they would. When they stop buying them, and the general investment public needs to support that, that's when rates are gonna climb, because they're gonna want a larger return than the federal government is right now. Right. So tapering is the thing you want to hear. Winding down the balance sheet, that's the other big trigger term. When you hear them saying they're gonna start winding down the balance sheet, that's the rates will go up. Yep.
All right, great. Thanks for coming and
Yeah, anytime.
prospect, you guys.
Appreciate it. Thanks, guys.
Thanks, Nick.
Anytime.
So yeah, get me on that,
I'll shoot you right away.